Hello, very good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm the Senior Market Analyst of OANDA Asia Pacific. So before we start our Daily Dose of Market Insights, today will be the 21st of February 2024, Wednesday. Okay, so before we kickstart, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses could exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook, which is the main gist of this daily dose of market insight of the various cross-asset classes, let's have a key recap of highlights and events, and as well as the broad-based asset class performance during the overnight session yesterday. So let us start with the FX market first. So over at the FX market, the dollar actually the dollar actually remains soft, with the dollar index down negative 0.22% yesterday. So that's actually came in line with this continuation of this a bit of hesitation by the 10-year US Treasury yield to break above the 4.33% yesterday. And with the dollar weakness, we start to see gold actually continue to rally within its medium-term range configuration. So gold as in XAU/USD added 0.32% yesterday. And for WTI crude oil price continue to yo-yo within its medium-term range configuration. So we do see a weakness coming back into the WTI crude oil within our expectation below that below that range resistance of 78.40 US dollar per barrel / $79 US dollar per barrel. All right, so what's interesting over here is before we touch on the major US stock indexes performance, I want to share with you all the movement of not WTI, the 10-year US Treasury yield and the dollar index. All right, okay, so what we could see over here is that the dollar index, okay, actually continues to actually retreat after hitting 104.85. That resistance level being met on last Tuesday. So this push up over here, right? This strong push up was that result of that hotter than expected US CPI print that was released on last Tuesday. After that, it hit the 61.8 Fibo retracement of that previous medium-term down move from the high of this high of 3rd of October all the way down to 28th of December. This move over here, it hit that. Then thereafter, it slowly did a 1, 2, 3, 4, 5, 6 consecutive session of decline at this 104.85 level resistance, which is so the 61.8 Fibo retracement as well, and totally erased off the gains that was being induced, exposed hotter than US CPI print release. All right. And right now it's actually trying to retest that 200-day moving average, which is the near intermediate support level right now at 103.70. So this dollar softness or dollar strength weakness, giving up its exposed US CPI data strength, was actually pretty much driven by that 10-year US Treasury yield. Okay, so that US 10-year Treasury also pretty much hesitant to break above that 4.33% resistance level, all right, from yesterday as well. Okay, so what we could see over here is that dollar strength reversal, medium short-term dollar strength bearish reversal. That means dollar softness being triggered by the US 10-year Treasury yield refusing to break above the 4.33% level. And yesterday, this particular team play this particular what I call intermarket movement of dollar weakness followed by dollar softness, the dollar weakness followed by the softness of the US 10-year Treasury yield refusing to break above 4.33% level is due to the fact of this reinforcement by the conference board leading index. So this, what is this conference board leading index? So this conference board CB leading index is a composite of leading US economic indicator, leading, not GDP. So we are talking about ISM data, we're talking about financial condition, we're also talking about movement in the various movement in six I think there are a couple of financial markets related metrics as well that lead to this composite leading index. So total there are 6 metrics in all. So this conference board US leading index continue to inch downwards. So yes, for the month of January, month-on-month growth, it went down negative 0.4%, below expectation of negative 3%, and also below the previous month of negative 0.2% in December last year. So all in all, right, the trajectory still remains soft in terms of the leading index, conference board leading index. So indicating to us there's still going to be economic we call it a softness on the aggregate going forward in Q2 and Q1 this year. All right, so that could actually explain that softness in that US 10-year Treasury yield. So given that the leading index is weak, that means very likely the Fed, it's still going to be on a policy of interest rate cut rather than continuation of an interest rate hike. But the next key question over here is only the timing of the interest rate cut, means the first interest rate cut, when will it be enacted, and also as well as the pace of the interest rate cut. So based on the CME Fed Watch 2, based on the current pricing of the CME Fed Watch 2, we are still looking at June right now with a total of potentially 4 interest rate cut this year, okay, being reduced from 6 at the start of the year. Okay, so that actually explain this dollar weakness, okay, from the softness in the US 10-year Treasury yield, reinforced by a weaker than expected conference board leading index that was released yesterday. So now the key story over here is that the dollar weakness as well as the softness in the US 10-year Treasury yield did not translate into the benchmark US stock indices. All right, so the benchmark US stock indices yesterday was very weak. So the weakest was actually the long duration we call it index, which is the Nasdaq 100, and which is down negative 0.79% on the Nasdaq 100. So this Nasdaq 100 over here, it has the maximum drawdown. So the maximum intraday drawdown or the intraday sell off yesterday was negative 1.6%. All right, negative 1.6%. But throughout the close of the session, it managed to erase slightly of a partial portion of the intraday losses of negative 1.6% to close slightly higher, but still negative territory at negative 7.9%. The Dow Jones Industrial Average almost unchanged sideways at negative 0.17%. The SPX down negative 0.6%. The Russell 2000 was the worst performer at negative 1.41%. So the reason, the culprit of yesterday's sell-off in the major US stock indices, especially in the Nasdaq 100, is due to the fact of the mega cap stocks that actually sold off yesterday or underperformed yesterday. I would say if you look at the heat map of the S&P 500, we see a slew of red within the technology space, especially the deepest red was Nvidia, that has a significant influence on the rally that is being seen on the benchmark US stock indices earlier at the start of this year. So later I'll flash you a chart. Why is it so? Nvidia actually down negative 4.35% yesterday. So it has intraday loss, with the maximum loss drawdown yesterday was at negative 6.6% for Nvidia. So the reason why Nvidia has this profit, what call it, steep sell-off, was due to the fact of a risk event that's going to take place later at the close of today US session, which is the close of today Wednesday US session, which will be the Q4 release of Nvidia. So later I'll share with you the expectation on the Nvidia Q4 release when we actually touch on the Nasdaq 100 short-term technical outlook. Okay, why Nvidia is important to Nasdaq 100 as well as S&P 500, because Nvidia is the top 5 component stock inside the S&P as well as inside the Nasdaq 100, as well as the S&P 500. I think it's just top 6 if I'm not wrong. So to double confirm, we could actually go to this website called slickchart.com. So it gives us a the weightage, component weightage of the S&P, the Dow Jones, as well as the Nasdaq 100. So if you look at the Nasdaq 100 companies, as quickly banks flash to your right here right now. Okay, sorry, it's a bit slow, the website. Okay, so Nvidia is the third biggest weightage in the Nasdaq 100. That if you look at the S&P 500 over here, is actually also the third weightage stock inside S&P as well. So for Dow Jones, for sure, is not inside the Dow Jones Industrial Average, because the Dow Jones Industrial Average has a different way of compounding, and also most importantly, Dow Jones Industrial Average, the 30 component stock, is being weighted by their price instead, based price sensitive rather than market cap sensitive. Okay, so that's pretty much short in short form. Okay, so basically what we see over here is I'd like to share with you why Nvidia is important. If you were to look at the chart over here, okay, so this is the year-to-date performance chart. So previously, Nvidia right now, based on yesterday closing price, year-to-date gain was 44% or 44.2%. Its peak so far was at this 553%. That's as of 14th of February. So yeah, that was yesterday's sell off yesterday. So if you look at 44.2%, so that is actually 2.7 times from the Mega 7 cap stock, including Netflix, which is 16.5%. And within the semiconductor index, SOX is at SOX only 10.7%. So the Nvidia is actually 4 times more than the year-to-date rally of SOX. And even if you look at the Nasdaq 100 ETF, which is at plus 6.14%, so that is actually 7 times more. Nvidia year-to-date return was 7 times more than the Nasdaq 100. And if you look at the S&P 500 ETF, which is at plus 5.10% year-to-date as of yesterday close, that's actually 8.7 times more in terms of the rally of Nvidia year-to-date rally. And if you look at the equal weightage SPF ETF, the RSP, the ticker, that means what I do over here is that this particular ETF actually divide, or not say divide, look at the component stock on the SPX 500, not SPF, SPX 500 on the equal weight basis. That means everything is normalized according to equal weight. So the equal weight SPX 500 ETF, the RSP, is only gaining 1.15% year to date. That if you look at the return of Nvidia, the Nvidia return has a whopping 38% times more than the RSP return over here. So what we could see over here is that we see very clearly the one that is leading the fort in this year-to-date performance among the what I call benchmark US stock indices is Nvidia for sure. So for Nvidia over here, right, it has a very significant influence in terms of sentiment feedback loop on the major US stock indices over here, So anything that is the Nvidia continue to actually shape a further potential movement, it could for sure impact the Nasdaq 100 and the S&P 500 going forward. Why? At least in the shorter term, because of its huge weightage inside these two index, and it could actually translate to a feedback loop into the broader market as well, given that this particular stock is leading the fort among the inside the US stock market. If you're looking at its year-to-date performance, net all in all is actually driven by its optimism in terms of earnings growth related to AI team play. All right, so if you look at the situation over here, one thing I want to share with you for Nvidia over here at this point in time, this Nvidia over here. So if you look at Nvidia, currently this is the situation Nvidia. So Nvidia, right, if you look at my screen over here, let me expand my screen so that you guys could see. Okay, Okay, so this should be huge enough. So at the bottom of my screen over here, this is Nvidia earnings. All right, earnings. So maybe perhaps I could expand. Let me see whether I can expand my screen over here. Okay, I can't expand this. Okay, so no mind. So what I could do over here is at most I could drag it all the way down here. Okay, then let me expand it up. Okay, good. So if you look at my screen over here, this was the expectation later on, based on the poll. So market is actually expecting Nvidia to have a earning EPS, earning per share at $4.59 for Q4 earnings, for Q4 result, last year Q4 result. So if you look at into the year-on-year growth 1 year ago, that means we talk about Q4 in 2022. So Q4 2022, right? The earnings, actual earnings was 0.88. Okay, 0.8. So if you look at the earnings growth, year-on-year growth, so market is expecting an increase of 420%, 420% increase in earnings growth on a year-on-year basis, based on its previous 1 year ago quarter. That means in comparison of Q4 23 quarter to Q2 23 quarter. So if you look at the earnings trend, right, in the last 4 or 5 quarter, 1, 2, 3, 4, 5, it has been sloping upwards. So the expectation, right, is pretty much optimistic of Nvidia to actually has a higher trajectory of earnings growth going forward. So any disappointing move on Nvidia over here could have a potential detrimental impact on the Nasdaq 100 and the S&P 500, and as well as the broader base, we call it US stock market as well, given it has a significant influence in terms of the year-to-date performance that I shared with you earlier on. And if based on a news report over here by Wall Street Journal, so traders in the option market actually right now wager a explosive move on Nvidia stock post earnings announcement. So based on this report over here, if I could expand my screen, what the option market is pricing right now, the option traders, the option market is actually pricing in at around 11% move in Nvidia share after it reports its earnings at the close of the US session tomorrow. So an 11% move is a two-way move, or that means it's either potentially plus 11% up or negative 11% down. So if you look at the way this kind of huge movement that's being price in by the option market, we could for sure tell us that it could be a very volatile session going forward tomorrow, after the close of the US session, especially on the Nasdaq 100 and as well and the S&P 500 index. Okay, so this is the key a driver that Nvidia has on the broader base US stock indexes, especially on the Nasdaq 100 and the S&P 500. So I hope that I could actually link up the dots for you. So now, for those who wants to know what is the technical chart like on Nvidia, given that we know that Nvidia itself has a significant weightage on the Nasdaq 100 and the S&P 500. So for sure, we ought to take a look at the technical outlook on the on the Nvidia to actually decipher what is the likelihood will be like in terms of its trend. So if you look at the Nvidia over here, so let us start with the Nvidia trend first. So this I put it in log. Why? Because why in log? Because log chart is good for to analyze a better technical analysis for parabolic movement price action, which Nvidia has really did in the last 2 years or so. So if you look at the chart over here in log, okay, we could do that in log in trading view. So this is the trading view chart over here, end of day chart, daily chart in log. So what we could see over here is that the medium term and the major trend is still intact. Why? Because price action is still trading above the 50 and the 200-day moving average. All right, but what you could see over here is that the price action actually react off a Fibo extension level at 750.70, very close. So that is actually the current all-time high of printed in 734.50 in 13th of February. Okay, so what's interesting over here is that there's a negative price reaction of this dotted line here. So what is this dotted line? This dotted gray line is the median line of this major ascending channel that I drew from the low of 29th of December. And if you correspond this price action right now with the its RSI. So its RSI has really went to a extreme overbought level. Okay, not really that extreme. So the extreme overbought level was much earlier. Okay, at this level here. So that was in November 2021, slightly above, below it level. Okay, so that was the extreme overbought level. So what you could see over here is that the RSI has started to shape a lower low as well, lower high, pardon me, a lower high. Okay, if you look at the price action didn't shape a lower high, it shaped about similar high. Okay, so that is considered as a mild bearish divergence as well. So after this mild bearish divergence, yesterday price action actually exited from the overbought level. Okay, exited from overbought level. So indicating to us, right, there's actually risk of what I call price action weakness going forward into Nvidia, and with the next support level to watch will be at this support zone over here, which is at 62850/600 level, which is so close to the 50-day moving average, and as well as the close to the lower limit of this major ascending channel. And if you do the Fibo retracement of this last medium-term uptrend from 4th of December all the way up to the current high, okay, all-time high is around the 60. Okay, wait, give me a minute. Okay, let me remove this so that you guys can't see it. Okay, it's at the 61.8, not 61.8. What the? Okay, 1 second. Let me delete this. I think there is some error here. Okay, a bit sticky. Sorry. Okay, let me do it one more time. Okay, it's at the 38.2% Fibo retracement in lock. So if you go to the normal scale chart, is the 50 and 38 and 50% Fibo retracement exactly. All right. So net, this is the support level to watch for any potential price action weakness on the Nvidia. So if Nvidia indeed starts to translate down to this level over here, based on the current closing price, that what we have into this zone is a potential negative 13% decline if the 75070 resistance is not surpassed to the upside. Okay, so that could also potentially lead to Nasdaq 100 weakness that is ongoing, that is seeing right now. So if you look at the current Nasdaq futures right now, is actually continue to actually sell off in the Asia session. Okay, so if you look at the Nasdaq futures right now, what is it trading? Yeah, okay, it's actually down negative 0.3%. Okay, so that should explain why this ongoing weakness in the Nasdaq 100 against the rest of the major US stock indices. All right, so now I really link up the important dots on Nvidia over here. Why does it has an impact on Nasdaq 100 and the broader US stock market? So I leave it for here right now because due to time constraint, I don't want to touch much further. So now let us straight jump into the short-term technical outlook. So I already covered the important key events that took shape yesterday, and in terms of the price action movement. Okay, so let's start with the major stock indices first. Okay, starting from Asia on Hang Seng 33 index. So the Hang Seng 33 index, the Hang Seng or the Hang Seng index or the Hong Kong 33 index we call in our platform. So let me expand my screen so that you guys could see. Okay, so this counter trend rally continues to move up within our expectation. So price action really hit the first resistance, the first and second resistance at 16,520 and 16,000, almost coming close to 16,760/16,860 level. So with that, I'll be actually having a tighter key short-term pivotal support for today at 16,060 level. So first resistance, first support level to watch for sure will be this zone here. Okay, this zone, this level here. So I don't want to put it so tight as my key short-term pivotal support for today, which is 16,390. So I'll use 16,060 level. If any potential pullback managed to hold above 16,060 short-term pivotal support, this ongoing short-term counter trend rebound scenario could still potentially remains intact above the 16,860 resistance level, exposes the next resistance. The next intermediate resistance will be at 17,010, 17,130. So what's this level? It actually confluence with this graphical swing high area of 2nd of January, and as well as a Fibo extension cluster level that I drew right now from the low of 22 of January, project it to the low of 5th of February. So that's actually 1.236. And if you take another cluster level from here, project it to here, that's give us around 1.236 level. Okay, so all pointing to the graphical, conferencing with the graphical swing high area of 2nd of Jan at 17,010, 17,130. So still maintain that short-term bullish bias on the Hong Kong 33 index, as long as 16,060 tighten key short-term pivotal support holds for today. Only an hourly close below 16,060 will damage this short-term bullish bias on the Hong Kong 33 to see another round of a decline to test the lower limit or the lower boundary of this minor ascending channel, now acting as a support at 15,720. Okay, Nikkei 225 or the Japan 225 continue to actually test this 38,260, 38,120 short-term pivotal support level. So we have a bit of excess yesterday, excess level. So we try to play around with this pivotal support level, which is also correspond to the former minor swing high of 13th of February, turns into a pullback support level, okay, around this zone here as well. So what we could see over here is pretty much muted movement so far in today's Asia session for the Japan 225. So still no change, still using 38,260, a bit of excess at 120. So 38,260/120, that will be my short-term pivotal support for today to maintain that short-term bullish bias on the Japan 225. So I do have a first resistance to watch up for, which is yesterday's Asia session, European session high. Okay, which is also this level here. Okay, before that sell off took shape during the US session. So that will be 38,570. Okay, so that will be the first resistance level to watch. Above 38,570 exposes the next resistance, which for sure that will be the current all-time high level printed in December 1989. So that is at 38,957. All right, only an hourly close below 38,120 will invalidate this short-term bullish bias to see the start of a minor corrective decline to retrace this very steep uptrend that is in place since 4th of January, start of the year, to actually see a retest at the next intermediate support level at 37,570. So that is actually the swing low area of 14th of February, and also the a break below 37,570 exposes 36,880, which actually confluence with the upward sloping 20-day moving average. Okay, then German 30. So German 30 continued to trade sideways yesterday below our short-term pivotal resistance of 17,130. So we will still maintain that short-term bearish bias within this very complex as price action going to do a retracement back into its expanding triangle range configuration or expanding wedge configuration that we see in this gray line over here, in place since 30th of Jan 2024 high. Okay, so support level to watch for sure will be at 17,000 level, which is the close to the 200-day moving average as well, and below 17,200 exposes the next support at 16,950. Okay, which is the middle of this expanding range configuration. So as long as 17,130 short-term pivotal resistance holds, we will still maintain that short-term bearish bias to see a retracement back inside this expanding range configuration for the German 30 towards 17,000/16,950 support level. Only an hourly close above 17,130 will invalidate this short-term bearish bias to see the continuation of this impulsive up move to retest the resistance at 17,200 in the first step. That's for the German 30. And given the weakness, okay, before I start on the Nasdaq, the Dow Jones Industrial Average, let's look at the Nasdaq 100. So given yesterday volatile movement in the Nasdaq 100 or weakness, it's good to take a step back and look at the longer term picture. So this is the longer term picture of the Nasdaq 100, right? So for those who actually follow us during our days of market insight, I do highlight this bearish ascending wedge configuration last week. So we do mention that any potential short-term bullish bias is more like a residual push-up to retest the upper limit of this bearish ascending wedge, which confluence at a Fibo extension cluster level at 18,270/18,435 level, and also coincide with the upper limit of this major ascending channel that I drew from the low of 6th of Jan 2023 low. Okay, so yesterday price action has did a bearish breakdown below the ascending wedge configuration, and before this bearish breakdown, the medium term RSI has already starts to print this bearish divergence condition, indicating to us that the medium term upside momentum has starts to turn very weak. That means it's been losing its upside initial, so prompting to us that also that whatever short term bullish bias that we have is more likely a residual push up, given the emergence of this bearish ascending wedge and confluencing with the medium-term daily RSI momentum indicator flashing that bearish divergence condition signal since a condition bearish divergence condition since 23rd of January. So given yesterday's price action move with the bearish breakdown on the bearish ascending wedge configuration, so the next support level to watch in the first step will be the 50-day moving average at 16,930 level. So failure to hold at this 16,930 level, right? That means it's actually a zone. That means 17,160/16,930. This zone over here potentially, right, could expose the next medium-term support level at 16,170, then followed by 15,820/690. So this is the confluencing with the 200-day moving average, and as well as the lower boundary of this major ascending channel. All right, so the major uptrend is still intact, except the fact that we are now at a risk of a potential medium-term corrective decline scenario for the Nasdaq 100. So we're talking about a multi-week medium-term potential decline, corrective decline scenario unfolding in the Nasdaq 100. All right, so with that daily chart has started to turn into, has started to flash out that bearish technical element. So for sure the short-term outlook will be bearish as well for today. So so the 20-day moving average right now is acting as a resistance at 17,630. So we may see a bit of push up over here, given that the RSI already start to exit from the oversold level, pardon me. But I don't want to use 17,630 as my short-term pivotal resistance for today. I'll rather use the pullback of this former bearish ascending wedge range support now turns into a pullback resistance level at 17,730. We also confluencing with the minor swing high area of 19th of February. And if you do the Fibo retracement of the entire decline that took shape from last Friday all the way down to yesterday's intraday low is actually 61.8 Fibo retracement as well. So in any case of a potential snapback movement, as long as this snapback up move didn't surpass 17,730, that is the short-term pivotal resistance for today, we will have a bearish bias on the Nasdaq 100, with the first support level to look out for will be at 17,350. A break below 17,350 exposes the next support level at 17,160, which confluence with the minor swing low area of 1st of February to 2nd February, as well as the upward sloping 50-day moving average that is also coming to at a support at 17,160 first. Only an hourly close above 17,730 will revive the bullish tone. That means invalidate this short-term bearish bias to see the intermediate resistance coming in at 18,000/18,030, which is so confluence with the current all-time high level as well, printed on the 13th of February last week. Now, given the fact that the Nasdaq 100 has really turned weak, and the Nasdaq 100 is the leading US benchmark stock index, so I'll be pretty hesitant to remain a bullish bias on the US Wall Street 30, which is the Dow Jones Industrial Average. So still recall that yes, the Dow Jones Industrial Average is still holding above the 20-day moving average and also holding above our short-term pivotal support that we have since last week at 38,365. So given the weakness of this leading US Nasdaq 100 index, which is the one that is the top performer among all of them, I'll be hesitant to remain bullish on the US Wall Street 30. So for today, I will have a neutrality stance instead between 38,645. So that is the minor range resistance that is being formed since Monday this year, Monday this week, not this year, Monday this week, where yesterday price action also refused to stage a bullish breakout of it as well. So for sure, this is the upper neutrality range that I have, 38,645 and 38,365. Okay, so either a breakout of this range will actually dictate the next movement in the shorter term. So hourly close above 38,645 will reinstate that bullish tone. However, a breakdown below 38,365 will start to see a potential kind of a multi-day corrective decline scenario, leading into a potential multi-week scenario in line with Nasdaq 100 weakness to retest the swing low area of 14th of February in first step at 38,065 near-term support level. Okay, so flipping to a neutrality stance for today on the US Wall Street 30. Okay, so that pretty much sum up for the benchmark stock indices. All right, pretty much mixed bag for now. Immediately jump into the FX market. So on the FX market, let us start with the European currency. So the European index, the euro dollar managed to stage a bullish breakout above the upper neutrality limit yesterday as 107.95 level. Okay, so with that, I'll be using given the bullish breakout of 1.0795 yesterday, so we'll be flipping to a short-term bullish bias for today. Pardon me, a bit of tongue twisting. So we'll be flipping to a short-term bullish bias on the euro dollar at 1.078 level. Okay, so using 1.708 level as a short-term pivotal support level, which confluence with the pullback of this former minor descending channel range resistance, now turns into a pullback support level, which is at 1.078 as well. So as long as 1.078 short-term pivotal support level holds, we'll flip to a bullish short-term bullish bias. First resistance to watch will be at 1.0830 that was tested yesterday, the 200-day moving average, before a bit of profit taking took shape during the US session yesterday. A clearance above 1.0830 exposes the next near-term resistance to come in at 1.0890, which is the 50-day moving average, confluencing with the minor range resistance in place since 26th of Jan to 2nd of February. Only hourly close below 1.0780 will invalidate this short-term bullish bias to see another round of choppy movement to retest the near-term support zone, the next near-term support zone at 1.0735 / 1.0725. We also confluence with the 61.8 Fibo retracement of this current short-term push-up that was seen earlier at the start of last Wednesday. The sterling dollar continued to trade within that neutrality range, so no change. Maintain that neutrality. We call it bias between 1.2675 and 1.2540 on the sterling dollar. Okay, let's go to the dollar yen. So dollar yen, no change. Yesterday, it attempted to retest the first support level to watch before staging a minor bounce, and today it continued to shape a lower high during the Asia session. Okay, so still maintain that short-term bearish bias on the dollar yen, and also the hourly RSI remains weak. All right, below the 50-day, no, below the 50 level mark. All right, okay, indicate to us there's still some signs of short-term downside momentum creeping back into the dollar yen. All right, so with that, for sure 105.70 will be the short-term pivotal support level to maintain that short-term bearish bias on the dollar yen. First support to watch will be 149.60. A break below 149.60 exposes the next near-term support zone at 148.80 / 148.40, which also confluence with the upward sloping 20-day moving average. Only hourly close above 150.70 invalidates the short-term bearish bias to see a push up to test the major resistance zone of 151.40 / 151.95. Okay, now very quickly will be the Aussie dollar. So Aussie dollar, yesterday we do have a bearish bias below 65.70, but given the dollar weakness that's being seen in the dollar index. So I'll be have a low conviction to maintain that short-term bearish bias on the Aussie dollar. So for today, I will be flipping to a neutrality stance on the Aussie dollar, neutral between 65.70 and 65.20. An hourly close above 65.70 will see the extension of this ongoing short-term movement to test the next intermediate resistance at 66.20, which also confluence with the 50-day moving average, and as well as the minor range stop of 24th of Jan to 1st of February. All right. So flipping to a neutrality stance for today on the Aussie dollar at 65.70/65.20 level. Given that low conviction for a bearish movement due to the fact of the dollar index getting weak for today. All right, that I shared well earlier on. So for spot gold, continue to inch higher due to dollar weakness. So right now it's actually testing the first resistance that we highlight to your guys at 2032 level. So right now the intermediate support to watch for sure will be the 20-day moving average, okay, which is also confluencing with yesterday's low as well at 2022. So I don't use 2022 as my short-term pivotal support level. So I will have a Titan key short-term pivotal support level at this 2011 level, which is corresponding closely with the minor ascending trend line support that I drew from the low of 14th of February, and as well as this congestion area over here, former congestion area. Okay, 2011. So any potential pullback that's managed to hold above 2011 will still maintain that short-term bullish outlook or bullish bias on spot gold XAU/USD with the next resistance to watch at 2042. So what's 2042 is actually the upper limit of this medium-term ascent symmetrical triangle range configuration that has taken shape since the low of 12th of December. So the upper limit, so this is the upper limit of the descent symmetrical triangle range configuration from the high of 28th of December. However, an hourly close below 2011 will negate this bullish bias to see the price action of the spot gold XAU/USD to transverse down towards the lower limit of the symmetrical triangle range configuration at 1996/1986 level, this zone over here. Okay, so still maintain that short-term bullish bias on spot gold with a tighter key short-term pivotal support at 2011. Then very quickly, we go to West Texas Oil. All right, so West Texas Oil. Okay, it's not over here. Let me open up the chart. Okay, West Texas Oil. Okay, so West Texas Oil continue to shape that bearish reaction of that 78.40 79 short-term pivotal resistance, which is so the upper limit of this medium-term symmetrical triangle range configuration that is in place since 15th of November last year. So all in all, right, it managed to hit the first support level that we had at 77.25 before trading sideways throughout the Asia session today. So for sure, no change because it didn't break below 77.25. So we do not want to tighten the key short-term pivotal resistance too much. So still maintain at 78.40, 79 figure level, short-term pivotal resistance to maintain that bearish bias within this symmetrical triangle range configuration, with the next support level to watch if 77.25 breaks down, the next support level to watch will be at 75.75. Only an hourly close above 79 figure level will invalidate this short-term bearish bias to see a squeeze up towards 79.80 in the first step, then followed by a break above 79.80, potentially sees the next intermediate resistance coming in at 81.65. All right, so net still maintain that short-term bearish bias within this symmetrical range configuration of West Texas Oil as long as 78.40, 79 figure short-term pivotal resistance holds. Okay, so that pretty much sum up for today's short-term technical outlook on the various cross asset classes. So before we go, right, what other key events to look out for other than after the close of the US session today, which is Nvidia Q4 earnings release? So if you look at the economic calendar for today, the other important event to look out for, right, in the US session will be the release of the FOMC minutes as well at 3 a.m. Singapore time. And prior to that, we do have a Federal Reserve official speech, Fed Bowman public speech at 2 a.m. Singapore time. And in terms of economic data, today there will be no key economic data released in the US, except the fact that we do have another Federal Reserve officials speaking, Fed Bostic speaking at 9 p.m. Singapore time. Okay, so with that, that's pretty much sum up for today's today's daily dose of market insight. Okay, so before we go, there's one more thing I want to share with you all is Dow Jones Industrial Average. Very important. Why? Because Amazon will actually replace, will be part of Dow Jones Industrial Average with effect on next Monday. Okay, next Monday, 29th of February. Why? Because they're going to replace Walgreens. So the replacement of Walgreens was due to a stock split by Walmart that actually reduces the weight of Walmart in Dow Jones. So in order to have a better consumer retail space weightage in sector in Dow Jones, that's why the index compiler, which is the S&P Dow Jones, this is the index compiler actually include Amazon into Dow Jones Industrial Average. So to have more, if you want to have the background story of this over here, you can actually Google over here S&P Dow Jones indices. They actually release a public statement, a press release after the close of the US session. Okay, you can read up more on that. So I don't want to touch on the details. So with that, today we do have a bit of extension of today's daily dose. Why? Because it's important, because I need to tell you all the linkage of Nvidia that has an impact of the US Dow Jones Industrial, that has the impact on the major US stock index, especially the Nasdaq 100 and the S&P 500. Okay, so with that, do have a great day ahead, and we shall speak again on Friday, because tomorrow I will have a day off. So our daily dose will be back again on this Friday on the 23rd of February. So I see you guys again on Friday. Thank you.